It's the pipeline versus the payroll tax cuts. Republican leaders saying the Keystone oil pipeline will pump out more jobs. That's why they're tying it to their payroll tax cut bill. But the president's threatening to veto that plan. He says extending the cuts will put more people to work. The fight's set to come to a head next week. So who's got it right? Hi, everyone. I'm Brenda Buttner. This is Bulls and Bears. The Bulls and Bears this week, Tobin Smith, Jonas Max Ferris, along with small business owner Amelia Antonetti, Todd Schoenberger from the Black Bay Group, and Susan Ox, a former senior advisor at the Treasury Department. Welcome to everybody. So, Amelia, which will get more Americans working, payroll tax cuts or that pipeline?
This shouldn't be any hard for anybody to figure out. Absolutely the pipeline. Don't forget, the tax cuts are temporary, and it's not going to change the uncertainty for small businesses, and it's absolutely not going to put that much money at the bottom line for us to be able to go out and actually spur on the unemployment. So the pipeline absolutely, hands down, short and long term, it's better, and for the future growth, let alone changing the power to be able to bring us as an alternative here back to the U.S. for oil.
Todd, you like those payroll tax cuts, huh?
I do like the payroll tax cuts. Look, tax cuts pay for themselves. And look, this pipeline, it's a pipe dream. It's not going to create the jobs that everybody says it's going to create. The GOP is trying to make it out to be that this is an environmental argument, that they're going to actually be able to pump in all this oil, the oil sands into the Gulf of Mexico, and we're going to have a lot of people digging ditches for this pipe. But that is actually temporary, Amelia, because you're going to be looking at a couple of jobs, and that's it. It's going to end. And if anything, it's not going to help the overall economy because it's not going to pump up a lot of oil supply that's going to bring down gas prices. It's a wash.
Susan, what is Todd shoveling, huh?
I don't know. It might be Freaky Friday because I'm agreeing with Todd. He's right. This is a tiny drop in the bucket versus the broader economic growth that we need. This tax cut is going to give us, at the minimum, $110 billion pumped into the economy. This pipeline is talking about, at the maximum, $6 billion. It's a teeny tiny little drop. And, you know, these jobs, Amelia, they're actually not permanent jobs. A lot of them are temporary construction jobs. So we need a much bigger, broader plan. And even the number of jobs that they're talking about, 20,000, even those, they're talking that those are work years. So they might not, one work year could comprise over more, 2 work years could comprise over 1 job. So this isn't even 20,000 jobs. It's a fraction of what we need.
Yeah, she's right.
Jonas?
We're going to need a much bigger pipeline then for more jobs. No, look. In general, tax cuts would be spectacular, but at this stage, we have to pay for them with offsetting tax increases, so it kind of neutralizes the effect. I'm all for tax cuts in a recession. We're not in a recession. We don't need to keep extending along these recessionary tax breaks that we got that are bankrupting Social Security, which is where that money would go. We already have the Bush tax cuts extended. We don't need further payroll tax cuts extended at this stage in the economy. The pipeline doesn't cost the government money. That's the key difference at this point.
Okay, L.A. Toby, come on.
Well, look at the logic here. If extending these Social Security, rebates is what it is, if that creates jobs, then when we end it next year, is that going to eliminate those jobs? I mean, you can't have it both ways on your logic, number one. Number two, we're creating an asset with private capital. That's what XL Pipeline is going to be. And number three, remember that all that oil being displaced is oil that was coming from Venezuela. We're not in the business of building jobs in Venezuela. We should be in the business of building jobs in America.
You're right about that, Toby. You're talking about a heavy sour variety. And here's the problem, though, is that we use West Texas Intermediate fuel here. You're only going to pump out that fuel when it turns into actual petroleum out to maybe the east and west coast. It's a very small part of the population that's actually going to get that type of gasoline.
But how many jobs, though, how many jobs would it create, though, do you say, Amelia?
You know, I still think the pipeline is a better long-term and short-term investment because not only are you going to get the job growth, but you're also going to then spur the other companies that are going to support this project. So you're getting the small businesses going, you get unemployment going a little bit. The payroll tax, I'm telling you, when you take a look at the screen, I looked at it. When I look at the bottom line, there's not a lot of money there for me to be able to turn around and say, okay, now I'm going to have, cash flow in my company. No, I'm not. It's not enough. It's not what the number one thing is we keep saying as small business people we need. It's not the payroll tax. We need to rehaul the tax system.
Boehner's coming out. He's actually trying to say that he wants the pipeline there, and he's trying to use the environmental card here. He's trying to create that argument.
Okay.
It's a lost cause for him.
Okay, Susan, doesn't it lower oil, gas prices too, and doesn't that help the economy?
You know, it could. It's not going to be in the short term, though. That's the other thing that we have to remember here. You know, the payroll tax would be an immediate benefit starting in January, in a couple of weeks. What's coming out of this pipeline...
Susan.
I know. Well, but getting rid of it, it's going to, well, first of all, Senator Reid wants to bring it down even further. But getting rid of it is going to have a contractionary effect. Toby, to your point, you're right. Getting rid of it is going to contract the economy. Some economists are saying it could be as much as half a point off of GDP next year. And when our estimates are only at 2% for GDP growth next year, we can't afford to lose a half a point.
Yeah, but they're also talking about not giving the payroll tax actually to the employer. Now they're talking about only giving it to the employee side of it. So that defeats the whole purpose of what the thing was supposed to do to help small business. So they're talking both sides here. They don't know what they're talking about.
I want to talk to Todd. Todd, you said it would pay for itself, the payroll tax cut. How can that be?
Well, just what Amelia just said. You're looking at putting that tax cut in the hands, that extra discretionary income, back into the employee, back into the consumer. It's going to permit them to go out and spend. That's what we want. That's the best thing about a payroll tax cut.
That is a fantasy. Look, that Social Security trust fund is already going to go broke anyway. And if you cut, that's the revenue stream of Social Security. It doesn't pay for itself. Otherwise, you'd lower it to 1%, and magically everyone would have Social Security. The bottom line, this is why it's a bad idea, is it has to be dealt with offsetting tax increase. If they had a plan to raise it in 5 years higher than it currently was before it got lowered to pay for it, you can make the case maybe in a recession. But today, it's a ridiculous plan. It has to be paid for. It's going to defeat the purpose of the tax.
Susan said it best. You have a gross domestic product right now sitting at 2%. That's only going lower. We could be headed back into another recession in the first quarter of next year.
Todd.
You want the consumer to go out and spend money. You want to give them a couple of extra bucks. Come on, Toby. I can't believe we're going to argue about this.
We have a $15 trillion economy. You're talking about $100 billion using Susan's number. How could that possibly push us into recession? You are sitting there making numbers up in that beautiful head of yours, and they're not right.
You are trying to tell me that you're going to stick this pipe through the middle of America. You're going to bring down the oil sands, and you're going to have a company like Valero that's going to actually refine this stuff, and that's going to help the economy. That's not going to help it. That's a short-term boost. That's, if anything, that might do some things for the first 6 months. This payroll tax cut will be much better for us next year.
All of the ancillary products. For instance, the steel piping, 65-70% has to be made in the United States. That's another about 3,000 jobs of big companies, of well-paying jobs. You know, what's intriguing is that actually the biggest supporters of the pipeline happen to be the unions, and they have it right this time, and that's the first time I've ever agreed with them.
Toby, can you speak to this issue about gas prices coming down? Has that helped the economy as well?
Well, you know, no, Brenda, you know, as everyone, that the gasoline and oil prices are priced in the world. It's not United States versus any place else. The issue is that as we take less oil in from other countries like Venezuela, et cetera, these Canadian firms, the actual firms are actually more owned by American shareholders than Canadian. It is a net positive for our country economically, business-wise, and it makes very sound sense because of the fact that we're excluding oil from countries that don't like us very much.
You know what? The spending that Toby's talking about, though, is only at the high end going to be $6 billion, and some of that's already been spent. So when you're talking about all these new construction jobs and the manufacturing and the engineering and all that other the add-on effects, they're really tiny. They're tiny in comparison to this tax cut.
Yeah, but you're missing the point here. First of all, the employees have already been had the decrease, and we've already shown that it put another $1,000 in their pocket for somebody who's making $50,000. It's only going to be another $500, so it's going to go $50.
Is a lot for somebody
it did not spur the economy, and the whole point of this was to give the employer the discount, and now they're saying they don't want to do that. So they're it's not right.
Okay, that's got to be the last word.